This is the online tutorial class on Unit 6 about the profit tax. Focus on receipt. Okay, the first question by looking at that is about ABC AAC Service Limited, a Hong Kong incorporated company. Surely this is a Hong Kong company, and that's why for this one, and we will focus on what are the business are being carried out by this company. And by looking at this company, is provide accounting service, right? Okay, that is a service company, and that's why by looking at the kind of the business, the service business, we will focus on what to determine the source, and you should discuss on that first. And because of uh, the service business is focused on where is the service is being rendered to determine the source of the service income. That's why we will base on that to discuss on the kind of the income of this company. Okay, by looking at this company, within this year, this company engage a team of the accountant who are required to travel between Hong Kong and China for that year. And the company have the following operating results. By looking at that, you have the service income 1.2 million, and there is some additional information of this 1.2 million, including a $400,000 derived from the service fully rendered by the accountant in China. Okay, and now we will discuss on this item first. And by looking at this, the service is being by a team of the accountant in China. And according to the locality of the profit, the service is fully rendered in China. And logical thinking, and you will find that based on the ordinance and the DIPN 31, that should be non-Hong Kong source. And possibly this $400,000 will be exempt from the Hong Kong profit tax. But surely, and you will find that the company will prefer to pay Hong Kong profit tax. Why? Because the Hong Kong profit tax is at a standard rate of 16.5% only, compared to the China, and that will be much higher. That's why, in case the company are required to pay Hong Kong profit tax on this amount, this $400,000, they can, based on that, to argue with the China tax authorities about that, and then this amount will be subject to Hong Kong profit tax rather than China tax. But how to argue? And in order to pay Hong Kong tax rather than pay China tax, now you should be aware of that. Be careful, and you may argue in this way. Although all the surveys are being rendered by the accountant in China, let's say the final decision are from Hong Kong, and also the audit report are being signed and issued by Hong Kong corporate company, and then and also this accountant are required to seek the advice through email, mobile phone, whatever things from Hong Kong side, and then possibly they can argue this should be a Hong Kong source rather than non-Hong Kong source. And finally, possibly this amount will be subject to Hong Kong profit tax. Okay, that's why it really depends on how you argue on this amount. Okay. And then the second item that will be related to the other investment income. Okay, the first one is the dividend from securities. Okay, that is related to Note 2. And also the second one will be the profit of the sales of the security, also related to Note 2. Okay, now we look at the Note 2. AAC involved in holding and trading in listed security in Hong Kong. Apart from the dividend, AAC make a gain 550,000 and a loss 150,000 from the trading in these securities. And finally, the net gain is 400,000. Okay, that's why, first of all, the first item is about the dividend, 21,000. Now, I have already discussed dividend there are three reasons that will not be subject to Hong Kong profit tax. Still remember that? The first one is dividend is being paid out of a taxed profit to avoid double tax. It won't be taxed again. Second one, and the dividend is being classified as investment. That is the capital assets of the company, and the dividend is a capital gain, and that's why there is no capital gain tax in Hong Kong. It won't be taxed. Third one, according to the ordinance section 26, it should not be taxed. Okay, that will be the three reason the dividend will not be taxed. That's why that will be exempt from Hong Kong profit tax. But the $400,000 for this one, and that should be subject to Hong Kong profit tax. Why? Because that is the security. And according to the DIPN 21, how to determine the source of the trading security profit? It's based on what? It's based on where is the security is being traded. Okay, by looking at that, there is the listed security in Hong Kong. Surely that will be traded in the Hong Kong stock market. And because of that, that should be Hong Kong source. And that amount, this $400,000 profit, okay, gain out of this trade of the securities should be taxable profit. Okay, and that amount should be taxable because that is the Hong Kong source. Okay, then number three, that will be related to the bank interest income, 1,000. Look at the number three, and this 1,000 involves two items. One is the interest on the renminbi deposit with a bank in Hong Kong, $400. Okay, for this one, and that should not be taxable, exempted. Why? Because of the interest exemption order in 1998. So remember this interest exemption order, and that should not be taxed from if an interest is out of a deposit. Okay, and the second one, interest on the renminbi deposit with a bank in China, $600, and that will also be non-taxable. Why? Because the concerning deposit is not in Hong Kong, and the interest on this deposit should be non-Hong Kong source. Okay, that is offshore income. Okay, because of that, both of these interests will be non-taxable. Now you should discuss all that. Don't provide the same reason. Okay. Then the number four is about during the year AAC make a net profit of 50,000 from the buy and sell of the foreign currency. Half of the fund used for the foreign currency trading was sourced from Hong Kong, from AAC bank loan. Now look at this item, and you will find that the company, the keyword, buy and sells, and also this company is a accounting service company, right? It's not a financial institution, but this company buy and sell foreign currency. Okay, that's why you treat the foreign currency as their trading stock. Okay, and also it's one of the keyword, trading. Okay, and because of that, that will be a trading profit. And also foreign currency, the profit out of the foreign currency, that will be subject to Hong Kong profit tax also. Okay, because there is a trading stock, and out of the trading stock you make profit, and that will be sourced from Hong Kong, and according to section 14, and that should be subject to Hong Kong profit tax also. Okay, because of that, after we have discussed all, then we can finally determine the amount that should be subject to Hong Kong profit tax amount. Okay, if you can argue the amount related to the service by the accountant in China should be subject to Hong Kong profit tax, then you won't deduct this amount that will be included. What the two items that should be excluded should be the dividend and the bank interest only, and that's why finally the adjusted total profit, total income, and that will be 1,650,000. Okay, then second question, and about Box Limited, a European film distributor received copyright amount 800,000 from APM Limited, a Hong Kong film distributors. What is the amount of the accessible profit of the Box Limited for the year if they are associate? If they are not associate, okay, that's why according to section 15, okay, and that is about the film distributors, right? And that's why according to section 15, and you will find that this amount, okay, and will be treated as deemed trading receipt from Hong Kong. Okay, because of that, also you will find that the section 31 will be applied to determine the amount. And for the first one, they are associate, but because they haven't owned the film before, okay, and because of that, that will be just 30% of the amount, 800,000. That will be 240,000 will be treated as the deemed trading receipt by Box Limited. And for the second one, they are not associated. Surely that should be 30% only. That's why the both of this part will be the same, 240,000. Okay, but for A part, if in case you mention about the film have been owned by the Box Limited in before, Hong Kong film distributor in before, then the whole amount, 100% of the amount will be fully taxable. Okay, and that's why that is the key thing which is determined whether that should be 30% or 100%. And there are two conditions should be fulfilled. One should be associate, and the concerning assets have been owned by the Hong Kong company before. Then that will be applied 100%. Otherwise, just 30% only. Okay, then question 3. Okay, about Triangle Limited. And this company in 2015-16, and they make an arrangement and assume that they are required to pay another company which is registered in Bermuda. That is the similar name. One is Triangle Hong Kong, one is Triangle Bermuda company, a trusted company incorporated in Bermuda. And this Hong Kong company are required to pay $150,000 for the use of the Triangle logo in the garment manufacturing by this Hong Kong company. Okay, and the question mentioned, assume the ILD have no objection to such arrangement. And what will be the outcome for this arrangement? And what will be the tax saving amount if they arrange in this way? Okay, then by looking at that, first of all, if there is no such arrangement, what will be the taxable amount? Okay, that's why so simple. And originally that have, let's say, is 1 million profit sales. Okay, and then the cost of goods sold is $800,000, and then the profit is $200,000. Okay, finally, and the profit tax amount will be 35,000. Okay, now assume that they have this such arrangement and also accepted by the Inland Revenue Department. What will be the outcome? Now we'll work on the result. Okay, if have such arrangement, first of all, and similar thing, the amount of the sales and the cost of goods sold, and one more expenses as about the payment of the use of the logo, 150,000. And finally, the profit amount is just 50,000. And because of that, the tax payable amount in oh, that's already 16.5. Sorry about that, wrong figures. Okay, please amend it. Okay, 16.5. Okay, that should be 8,250. Okay, and because of that, the amount, okay, that will be this part about the Hong Kong Limited. But the other one, that is the Triangle Bermuda, and for this company, and they will be subject to the section 15, right? Okay, the same thing, and this company will receive 150,000, and 30% of that will be treated as deemed trading receipt, and that will be subject to Hong Kong profit tax also. Okay, and also 16.5%. Okay, because of that, that will be 7,450. Okay, 7,425. Okay, that's the big amount. Okay, and then you add up these two figures, that will be 15,006. Oh, sorry, 175. Okay. Okay, compared to the original amount, that should be 35,000. Then the net amount of the saving will be 19,325. Okay, and that will be the saving amount. Okay, please amend the figures when you receive the answer. Okay, just let you know. Okay, and because of that, assume, okay, the IRD accept this arrangement, but normally I can say you won't be accept. Okay. Okay, then question 4 is about another company, X Christmas Limited, carry on business in Hong Kong as a manufacturer of trader of toys. And during the year on end 31 March 2016, Christmas incurred a royalty expenses 400,000 in respect of the trademark TMB. TMB is owned by a U.S. incorporated company, Toy and Me Industrial, and have been developed by its in-house research team. And under the trademark license agreement, Christmas is granted the right to use TMB in its manufacturing process in mainland China. All of these manufacturing products are then sold by Christmas in Hong Kong, and all the profit arise from their sales are returned as taxable profit by Christmas for Hong Kong tax purpose. The royalty cost for using the trademark is payable to the TME at the rate of 1% of the gross profit, gross sales of the product being the trademark. And TME Industrial does not carry on a business in Hong Kong, have no relationship to Christmas except from the trademark license agreement. Okay, now the question asks you to discuss whether this TME Industrial will be subject to Hong Kong profit tax or not in respect of the income received from the Christmas Limited. Okay, for this one, you need to discuss the concerning company will subject to what kind of the section in the Inland Revenue Ordinance. Okay, first of all, we will discuss starting from the general basic charging section, section 14.1. Okay, and then you should discuss the free condition. That means the companies will be carry on trade business profession in Hong Kong. You make profit, and the profit is arising in a divisor from Hong Kong. Okay, but you will find that this company is not carry on business and trade in Hong Kong. Okay, because of that, section 14 cannot be applied. Then we will apply another one, that will be section 15, 1B. And that is focus on what? Focus on the royalty income that will be treated as deemed trading receipt by a foreign company. Okay, but because you will find that for this section, you mentioned about the concerning patent or the trademark or whatever royalty the patent or trademark, and those should be used in Hong Kong. Okay, should be used in Hong Kong. But you will find that the Christmas company not used in Hong Kong is used the concerning trademark in China. Right? Okay, because of that, section 15.1b will not be applied, and then we will apply another one that will be section 15.1ba. That will be include those patent right are being used outside Hong Kong also. But one more condition should be fulfilled, and that will be the concerning company should claim the deduction on this royalty-free payment. Okay, that's why the Hong Kong Christmas Limited should claim this royalty payment to the Toy and Me as an expenses and account for the deduction in the income statement. Then the concerning amount being received by Toy and Me will be treated as deemed trading receipt and arising and derived from Hong Kong. And because of that, and then the section 21 will be applied to determine the amount, right? Okay, that's why because of that, and you will find that the amount, okay, will be subject to Hong Kong profit tax. And how to determine the amount? That will be the second part of the question. And according to the section 21, and that will be 30% of the gross royalty payment being received by the Toy and Me. Okay, and then in the concerning year, that will be 16.5% tax rate. And according to that, the receipt by the Toy and Me is 400,000 in total. 30% of that, and then subject to the tax rate 16.5 standard rate. And finally, and you will find that the Toy and Me are required to pay $19,800 to the Hong Kong government. But you will find that for this item, you will find that the Christmas Limited, that is the Hong Kong company, are required to withhold this tax amount on behalf of the Toy and Me. Okay, that's why when when the Christmas company remit the amount 400,000 to Toy and Me, they should withhold this 19,800. Just remit 380,200 to Toy and Me only, and then this amount will be paid by the Christmas company on behalf of the Toy and Me to the Hong Kong government. Okay, that will be the tax requirement. Okay, and by the ordinance, the Hong Kong company are required to withhold the tax payable amount on behalf of this Toy and Me. Okay, and that will be all the discussion on the question of Unit 6. If you have any question, you may ask me through the chat room.